Hello, my name is Russell Myers. Welcome to Issues Unite. All right, so the Western banking systems continue to be destabilized, which in turn destabilizes the entire economy. Right now, dozens of banks, as I've talked about in a past video, in the United States are at risk of, going under, just like Silicon Valley Bank. And the Federal Reserve this past week continued to increase interest rates by 25 basis points, in other words, 0.25%. And that causes more problems for the banking system because if banks want to borrow money, it's going to cost them more to pay it back. Now, the Federal Reserve has opened up what they call a discount window, and they've got all kinds of different things going on, including a reverse repo operation where banks, large banks that have liquidity reserves, they can put money, store money with the Federal Reserve, which in this case gets loaned out in short-term loans to struggling banks in the repo market. So you got the repo market and the reverse repo market that are tied together. The repo market is where banks borrow money. The reverse repo market is where, banks that have liquidity put money in for the other banks to borrow, making the larger banks larger. So, and apparently there's some talk that the Treasury will bail out. Janet Yellen has talked about bailing out all depositors of any size. Now, this actually causes more of a problem. In a way, the banks are now restricting credit to a larger degree because if they have any liquidity, they're not issuing loans, personal loans or commercial loans. The more that they restrict these loans, the more that the economy itself becomes restricted. If businesses cannot borrow money, they cannot expand operations, etc. But I'm not feeling too sorry for, any corporate entities because in most cases they shouldn't really need to borrow any money anyway. A lot of the time, if they're borrowing money, they're using it to pay out dividends to their shareholders. So I'm not feeling too sorry for them. Now, as I have pointed out before, this is not just the United States. A Swedish pension fund lost hundreds of millions of dollars because of the Silicon Valley Bank failure. Credit Suisse no longer exists. And now another European mega bank, international mega bank, Deutsche Bank, which has been having problems for years. Their stock value dropped by something like 35%, 9% in a single day. So they look like they may wind up failing as well. And what's going to happen? It's very possible very likely that the Swiss government is going to have to bail out. It's going to cost Swiss taxpayers, billions, maybe hundreds of billions of dollars for the Credit Suisse debacle. And it may cost the German government hundreds of billions of dollars if they wind up having to bail out Deutsche Bank. So nobody's lending money right now. Deutsche Bank does a lot of business in the United States, doing commercial banking, loans, etc. And they're not going to be able to do that right now. They're in too much trouble. So these are all big problems. And that reduces production, industrial production. It reduces retail. The more you restrict, the more people get laid off, the less consumer spending you have, which means you need less production. But a lot of this is what the increase in the interest rate was supposed to do, was restrict demand, reduce consumer spending, and reduce production. Now, at the same time that all of this is happening, Eastern countries and South countries in the South, they are expanding production and sales. China continues coming out of lockdown, which means more consumer spending, which has been pent up for the last 3 years. India is increasing production and consumer sales. The more you increase production, the more you increase employment, the more you increase how much consumers have to spend. So it's mostly the BRICS countries: Brazil, Russia, India, China, and South Africa. Now, a big problem with this is that these countries, including Saudi Arabia, they see the threat coming from the West of possible sanctions on them. Many of these countries already have sanctions on them. Russia is the most sanctioned country in the history of the world. So Russia has already, where our condition, our government, our debt keeps rising. At one time, 2008, the United States benefited from Russia and China holding U.S. debt. That debt is a loan from them to us. But Russia has completely divested themselves of U.S. treasuries, and China continues to sell off U.S. treasuries gradually. They don't want to sell it off all at once, which would crash the value of their investments. So, and other countries would definitely follow suit, trying to preserve whatever their loans are worth. So, all of this is happening as at the same time that there is the next BRICS summit that is coming up in August. August is not far away. And it is expected that the BRICS alliance is going to announce the creation of a BRICS currency. There is already a BRICS development bank that loans out money for poorer nations to be able to borrow money for expansion of production and transportation and trade. So if they make this absolutely formal, which I am fully expecting them to do, then more countries, Saudi Arabia, Mexico is showing an interest. All these countries may sign on to the BRICS system. That does not mean that they have to withdraw from the SWIFT system. So any countries that have not been sanctioned by the SWIFT system so that they cannot trade through the SWIFT system, like Russia and Iran and Venezuela, that means that these other countries, India, China, for now, can actually be members of both systems, SWIFT and BRICS. But the BRICS system shows signs, if it is implemented, of being a lot more stable than the SWIFT system, which is based largely on the stability of the Western banking system and the Western economies. Now, this has a lot of potentialities that are involved with it. If more countries are trading through the BRICS system and investing in any BRICS banks or financial organizations that are established under the BRICS system, well, if you see huge amounts of money being removed from the SWIFT system into the BRICS system, then that devalues the Western currencies. That's a big deal. So, countries that see the potential for having their assets seized, which, as the Western economies continue to become destabilized, the risk of seizure of assets, such as been done to Afghanistan, Iran, Venezuela, Iraq, Syria, all these countries can have their assets seized under the SWIFT system, and the Western banking systems are destabilized. The United States, with a record level of debt, national debt, and increasing interest rates, well, for political reasons and just general economic reasons, if even just investing in Western banks, that the banks are at risk of failing, and then BRICS comes along and becomes a lot more stable, more money will flow into BRICS and out of the SWIFT system, and it becomes a self-perpetuating cycle where BRICS will become larger and the SWIFT system becomes smaller, and, well, you get the picture. This is most likely going to happen. I'm fully expecting the BRICS Alliance to announce a currency for international trade, a system for international trade using either they will establish a common currency for this purpose, or just set up a system for which is growing and growing for these countries to conduct trade in native currencies. There's more and more trade being done in rubles and rupees and, I can't think of it, but India, Syria, Saudi Arabia, all of these countries may trade in their native currencies, bypass the dollar, and as the dollar is used less in international trade, the value of the dollar in the international trading, as compared to other currencies, will continue to fall. It's already at the lowest level that it has been, and since at least before the petrodollar system was set up between Nixon and Saudi Arabia. So we can fully expect that all of this is going to happen, and this is going to affect you. As I said, less money in the Western system means less employment, less production, etc. The only thing that might change this is if the BRICS alliance starts offering loans in native currency or a common current BRICS currency at lower interest rates than countries or organizations, companies, are able to get. If they are able to get a loan through BRICS entities than they can get through the Western banking system, then they'll start borrowing that way, and that increases the value of whatever currencies are being used. And lastly, the BRICS system is going to be based on actual assets that are backing up the value of whatever currencies are being used in that alliance, rather than fiat currency, where you're just creating more currency and devaluing your own currency. The more dollars that get printed, the more it devalues the dollar. We haven't seen that tremendously as yet, but it is coming. So, that means more and more countries are going to want a stable, currency to put their investments in. The more investors are going to want a stable system. So if they are able to access, if this is set up in a way that even individual investors or commercial investors are able to put money into the BRICS system, which will be more stable. Now, I expect them to try and destabilize the BRICS system by whatever means are available, but this is going to have a lot more controls on it than the Western SWIFT system. Why is this not doing what I want it to do? But hey, the Federal Reserve is going to keep expanding its balance sheet, and Biden has already requested another increase in the defense budget for next year. So, getting up there to $900 billion for the Pentagon budget. Now, I've pointed out already in past videos that that's not even the entirety of our actual defense budget, because you have to include the Department of Homeland Security, the CIA, the FBI, the VA system, et cetera, et cetera. You have to add all that to our defense budget to get, because all of those entities are involved in our defense, or at least are related to our expenses for defense. So, let's keep on, increasing our military budget, but let Main Street just collapse. This is what's happening. Wall Street is getting bailed out, and Main Street is going to be ignored until it's too late. Just like 2008, but this is going to be a lot worse. So we've got until August to try and turn this around, but it's not going to happen between now and August. So be ready for it. Let's wait and see. I'm not in any way saying that the U.S. economy is going to completely collapse, but it's going to be considerable. There's going to be a lot of pain coming down the road and nothing to head it off. Share this video. Talk about these subjects. If you can afford it, please donate whatever you can to help expand this channel and my presidential campaign. I hope you have a good day. Thanks for watching. Bye.